You've got me live. I hope you can see me. Hope you can hear me. If you can, please let me or Rob know in the chat. That's the live chat just there on the side. I don't know which way it is for you, but it's one of the two ways. If you can see us, say g'day. And if you can hear us, say g'day again. It would be wonderful if you can. It looks like everyone can. Looks like Raptor, you've already been speaking to SelfWealth. Says hi, Owen, Rob, and all. Good evening, everyone. Plant One, we are now live. If you can hear me, please let me know. It's great to have you with me. I'm Owen Rask. I'm joined by Rob behind the keyboard tonight. So if you see SelfWealth in the chat, it could be either one of us tonight speaking to you. So Rob and I are with you tonight. Sometimes Alex joins us, but she has the night off. And Rob, who's not doing too well tonight, he's a little bit sick. He's joining us, thankfully. And I can see a few of you have already responded to the live chat poll, which was a very simple one, which was, would you buy BHP shares if you could buy it for 30% less than today's price? And I can see a few have said, 73% have said, yes, you little ripper. Another answer is yes, but I'd be skeptical. So that's 17% for a grand total of 90%. And 9% have said, no way, Jose. So 9% have said, I wouldn't buy BHP even if it traded at 30% less, and I'd love to know why. So let us know why in the chat. Maybe Rob, I hope, will put up another type of poll throughout the session. So if there is another poll in there, I'll be sure to let you know. And it looks like, as I've said, there's more votes have come in for yes, you little ripper. Isn't that interesting that if we could buy it for 30% less, does that make it a better deal? Maybe. Actually, you know what? I should have taken this on board when I was buying my NFT, my crypto non-fungible token. I should have maybe thought to myself, would I buy this at 30% less? Is it still a good investment? It probably wouldn't have been, and I probably wouldn't be down 90% right now. But that's life. We make mistakes, huh? So thanks, Stuart. I can see that you can hear me. That's fantastic. So tonight we're going to go through 5 different companies. We're going to talk about basically 4 blue chips and 1 company that is now, let's have a quick look. It might actually be a small cap if I bring it up, and that's Redbubble. I'll switch my screen on so you can see what I'm talking about. Redbubble now may be a small cap company. Let's have a look. Market cap $412 million. So it's a fair bit smaller than the other companies we're talking about tonight. In terms of market cap, a small cap in Australia or a small company, probably anything below 300 or 400 million. The definitions vary. In the United States, you might say anything less than, say, 5 or 10 billion is a small cap. There are no hard and fast rules on this. But if we compare Redbubble at $412 million to say Seek, which is not the biggest company we're talking about tonight, it's 8 billion. So it's quite a bit different. Jeremy, great to have you with us tonight. Same with you, Uncle Ray. Just in time for the live chat with Owen and the team after a big day of driving for work. Well, Ray, I hope you're able to unwind after your big day. It has been a big week for a lot of us. We've got a lot of companies reporting. It's been pretty scary for people that own Redbubble. This is a company that I formally recommended as part of our service. So I feel it every time this company falls in share price. I really do feel this one more than others. But we'll get to that throughout the show. As we usually do, we've got our top 5 most bought and our top 5 most sold. So I'll get to that. Actually, that reminds me, I've got to do something else. And that is start with a joke. And this week, I thought I'd put a bit of a pictorial together because I figured this one might need a bit of a picture to go with it. So a client asks his advisor, where should I invest my money? Put it on booze, the advisor says. Where else are you going to get 40%? So that's the joke for tonight. Out of 10, how did I do? And I've got a little photo there of the Wolf of Wall Street movie, which was a real hit when it came out. Leonardo DiCaprio played Jordan Belfort, who you may remember as the Wolf of Wall Street, who inevitably went down, spent a little bit of time in the big house for a few of the things that went wrong. So I did an interesting study today. I just pulled some data to find how many companies out of all of the listed companies on the Australian Stock Exchange actually beat the Vanguard ASX 300 ETF over 10 years. And the number came back, and this is a pretty nuanced thing because there's a few technicalities here which probably don't make this 100% accurate. But it came out about 4.6% of companies, but the data's pretty crude. So it's like 1 in 20, 1 in 25 probably go on to outperform the broader stock market. So that's a bit of an interesting bit of trivia, a bit of a fun fact for you there. I can see a few of you. Benny has given me a 9 out of 10. Umbrella, Lemming, long time of the show, Umbrella, giving us an 8.7. Pretty good, thank you. Rob's given me a 4. So Rob, I think you're breaking up there. I can't hear what you're saying. Chris, 8.5. This is pretty positive. I think I need to start putting it on the screen more often. Okay, so just quickly before we get to the top 5 most bought and top 5 most sold, a few things. One is of course, our disclaimer. All of the information that we present tonight is limited to general financial advice only. If you want personal financial advice, the best place to go is a financial planner. They will be able to take into account all of your needs, goals, and objectives. Rob and I do not give personal financial advice, nor does SelfWealth, nor does Rask through online portals. So please speak to your financial advisor and read our financial services guides for more information. Second of all, it is an interesting time over on the podcast, the Big Swinging Stocks podcast by SelfWealth. Alex has been at it again. There are a few more episodes since Kate and I appeared on the show. So Rob's going to drop a link in the chat, I hope. So you can get the latest Big Swinging Stocks. It's actually ranking pretty well in the charts there, Rob. So congrats to you, man. I know you're the mastermind behind the show along with Alex. So wonderful to see. Fleur, you said you haven't seen that movie. You haven't seen The Wolf of Wall Street. Well, The Wolf of Wall Street has got to be MA or R15 plus, R18 plus, sorry. So you can be prepared for a bit of shock and awe, but it's a really interesting and really fun take on investing. I guess it's portraying investing as speculative, the Wild West, and a little bit scary, but for the most part, it's a good entertainment. It's like infotainment if you want to learn about investing. And the thing that I love most about The Wolf of Wall Street is I actually get famous actors and actresses to explain complex terms sometimes. So it's actually quite fun. Or am I thinking of the Big Short? Maybe I'm thinking of The Big Short. Either way, I love that take. And yep, I can see that Rob's just dropped into the Margot Robbie. Yeah, that's right, Jake. So I can see Rob's just dropped the link into the chat. He says, Nikki Thomas, who is from Magellan Financial Group, was on the latest episode of Big Swinging Stocks. Fantastic. Hopefully Nikki can join us on this show one day. Wouldn't that be nice? Okay, so let's get to the top 5 most bought and the top 5 most sold. As always, you've got to get your guesses in now. So 5, 4, 3, 2, 1 of the most bought, and then we'll go the most sold. And here's the key for tonight. We are including ETFs. So ETFs are included in tonight's list. So make of that what you will. I will give no more clues. ETFs are included. So let's jump across. And while you get your guesses in, I want to actually take a quick look at one company's results that I haven't actually looked at yet, which is a company called Challenger. It does annuities. I want to have a look at this company because the company I've followed for years, and I haven't actually taken a good look at it. So I want to have a quick look here. So a quick look at the market release. Challenger, what does it do? Challenger's business is basically broken down into 2 sides. One side of it is, okay, Rob's just told me a little bit off air. He just said that a little bit out of sync, but unsure how to fix that. If my internet is playing up tonight, I apologize. So Elon added again. Yeah, let us know if my internet is off camber a bit. I might just exit some of my windows so I make sure that I've got the fastest internet that I could possibly have. So I can see you're getting your guesses in, which is fantastic. I can see Jeremy's getting stuck in as well. Always good, always good. Michael Barron, you've guessed NDQ most bought. Mikhail, not sure how to pronounce that one, mate. Did you want to give us your most sold as well? So give us bought and sold both at one time. That'd be fantastic. I can see Luke's guessed VAS most bought, sold LKE. David's guessed VDHG, sold Zip. My screen's a little bit blurry. I apologize if my internet's a bit shaky tonight. I'm actually out here recording at home up in the Dandenongs, and it has been a little bit patchy today. So I apologize if that's the case. Okay, Adam, you've actually have written in. Okay, fantastic. Nav bought Challenger yesterday at the bottom. What did Challenger do yesterday? Excuse me, just quickly, I'm going to jump back to this. We'll go to Challenger, stock price chart. Let's have a quick look over the past month. So here we go. Oh, wow. So it dropped at the open, I see. So $7.12. Bought it. Did you buy $6.07? That'd be fantastic if you did. Straight back up. And I can see Josh's guest, Vass bought, sold, Westpac. I'll get to it in just a minute. But anyway, back to Challenger. Challenger is a really interesting business because it basically has two sides to its business. One is its life business, that's right here, and it has its funds management business. And you can think of these two businesses as very complementary. But for many years, the life business, which I'll explain in just a minute, has actually overshadowed the funds management business, which is probably the more exciting and the easier to understand of the two. So, what does it do? So, Challenger provides annuities. These are like guaranteed payments when you're in retirement, and they basically, like, let's say you go to see a financial planner, and they say, okay, the one thing that we could do for you is we could get you an annuity. An annuity will pay you 4% per year, guaranteed, something like that. And for the most part, it's been a pretty good experience for the people that have got those products and use them in retirement. But then the other side of the business is a traditional funds management business, and you can see here how they kind of leverage each other. And if we go down, I want to try and find how the funds management business is growing. But it's been quite a few years since I looked at this business, and I suspect it's actually growing very quickly because in speaking with financial advisors, I've actually found that a lot of them speak very favorably over the life business. So over the funds management business. So it's a company that I'm actually going to speak with a financial advisor tomorrow for the Australian Investors podcast. That's a lot of stuff. Maybe we'll do that next week when we've got a bit more time. With bond yields improving, how much would Challenger benefit from it? That's a great question, Nav. What I was hoping to get through to the actual financial report, the actual annual report, because the thing is, Challenger should benefit as interest rates go up. Challenger should benefit because it should actually be able to generate more income from the bonds that it holds for its clients, but it may also in the short term lose out a bit, Nav, from the price actually falling for those bonds. So as interest rates go up, bonds fall. However, they tend to yield more over time. So maybe that's something that we do next week once I find the annual report. Surprisingly, I can't find it here. No, I cannot find it. If anyone can find the link for me and just share it with me, that'd be fantastic. Okay, so what I'm doing is I'm going to share with you the top 5 most bought and the top 5 most sold. So, Rob, provided that you can still hear me, I'm assuming my internet's all good. It's been a bit very patchy tonight, so I may have to jump off and jump back in then perhaps. What I might do is I might just check if this is going to work for me. I might actually have to take an intermission for a second, guys, and try and figure out this internet situation because it doesn't seem to be liking me right now. I'm going to jump onto a different internet connection if I can. Pause while I try and do this. Sorry, guys. Normally it's not a problem. I actually have 3 internet connections here at home, and the one that I use the most is not working tonight. So I don't know if this is going to work, but we shall find out. 1 second. I will be right back. All right, so I'm going to try and pull off the miraculous live on air. I'm going to try and switch internet connections in just a moment. Call Rask IT support or Data 3. Yeah, Data 3 will be an interesting one. I've never tried to switch live on air, so we will try and do that. And I'm going to try and come back to you in just a moment. Hopefully, Telstra's got our back up here in the hills. And I apologize for anyone that's going to be cut off by this. So we should start a quiz in the chat. Here we go. So maybe Rob can keep you entertained with a quiz or a poll. I'm going to switch internet connections, and hopefully I can come back to you in just a moment. I've never tried this live on air. So here we go. 3, 2, 1. Let's see what happens. Okay. Can you hear me now? Hello. Can you hear me or see me? I would love to know. I've attempted the impossible. This is like trying to, I don't know, trying to do something that's while live, trying to not be live and then come back to the connection. Rob, if you can hear me, I would love to know if you can hear me. Woohoo! Okay, it looks like you got me back. Okay, great. We're back in business. Okay, this is good news. I'm very happy about this. Let's get back into it. And let's jump in to the top 5 most bought and sold. That is better, way better. So I'll give you a tip. Optus, not as good as Telstra. That's my tip for today. Don't rely on Optus to give you a good experience when you're going live. So I apologize about that. So much for 5G. Okay, so in at number 5, and I can see that many of you have already guesses in. I feel very embarrassed, but please stick with me because the top 5 are going to be worth it. I've actually got a new monitor set up here. In at number 5, we've got BHP. BHP is included as part of the SelfWealth portfolios that we are building. So you will remember that over time we are creating a portfolio. We're not doing it now because we're in the middle of reporting season, but we can see of the 2 portfolios that we're building, we've got the Heist portfolio. So far, the worst performer in the high stakes portfolio is Okta, which is down 27%. The best performer is Tesla, up 40%, and Pro up 28%. And we can see the average return is around about 3.5%. On the low tofu, which is our quote-unquote lower risk portfolio, we can see that the average return is 1.6%, worst return from BHP. However, in my spreadsheet, remember that BHP has undergone a split, which we'll get to in a moment. Okay, so in at number 4 is VGS. Remember, ETFs are included. VGS, the ISCI International Shares ETF, it's probably one of the most diversified share ETFs you can buy on the stock market. It's incredibly diversified. And what's really interesting, I'll tell you something that I learned the other day. So when I speak to investment consultants and investment like data scientists, what many of them conclude is that if you want international shares exposure, VGS is one of the best ways to get that international share exposure. It might be a pretty boring ETF on the surface, but it's actually one that is very well diversified and provides the long-term growth that so many of us are seeking. In at number 3, I know a lot of you guessed this tonight. In at number 3 is VDHG, the diversified portfolio. One of my favorites, you know this. One of your favorites, I know this. VDHG, super popular ETF, really well managed by Vanguard. Now, this is where things get a little bit interesting. And I can see Eve just popped the question in. My opinion is that VGS is over diversified. Well, Eve, have a guess what? In principle, I agree with you. So if we go to Vanguard, I'm just going to just divert for a moment. But if we go Vanguard, not VGS, I want VGS, not VAS. This ETF is extremely diversified, and that's actually something that I don't worry about, that I don't really like about it, to be honest, Eve. I actually prefer the exposure of IVV, which is the S&P 500 in the US. And I know some people will say, well, that's only US companies, which is probably a fair criticism. But let's say, for example, if you wanted exposure to other markets, you could buy the Europe ETF, or you could buy the Asian ETFs or managed funds. I like VGS for what it does, and I think it's a fantastic out-of-the-box thing. But I agree, hands-on, if I'm going to go with an ETF, I probably want a bit of exposure here and a bit of exposure there, and rather be more tactical with it. You can see the number of holdings inside the fund, 1,474. But the thing we've also got to remember, so Roger, you said, I heard IOO more liquid than VGS. Yeah, so the ETF, Roger, is a very popular one. I think I could be mistaken, Roger, but I think IOO is held by StockSpot, the broker, and it may be for that reason. With VGS, you're going to get exposure to places in the United States, but you're also going to get exposure. See the 17% exposure here. Now, what most people would say about IVD, which is the one I'm talking about, is that it's all US exposure. However, you can see that in any case, VGS is in the US anyway, but a fair chunk of the profits and revenue that the US companies make is actually overseas revenue. So that's actually one reason why I like IVVs, even if it is a US shares ETF. You do get that global exposure. Because, like, for example, Starbucks, Apple, Microsoft, all those massive companies, actually, even though they're US companies, they have exposure throughout the world. Anyway, massive digression. But Eve, you got me going. So at least we got there. Okay, in at number 2 is VGS. So VAS in at number 2, always the most bought, except for tonight. So I can see some of you are saying my internet is rough again, and I'm thinking, oh no, I've got 4 different internet connections here. I'm hoping that at least one of them can do something positive. Let's try and get this right over here so I can get it. I had to switch to my mobile internet because it's so patchy tonight. And actually, it's my NBN, which is not winning tonight, guys. So more MacBs. It's actually or no. Is it no MacBs? There's actually the NBN is the thing that's cutting out tonight. So that's the thing. And as for microphones, Jason, I'm actually using this one. I've got my proper Rode mic set up here. I've got a Rode NT USB, and I've got all of my bells and whistles. But yeah, do you have Aussie Broadband for broadband? Yes, I do. So Aussie Broadband is the one. So Sparky, yeah, you're fine in WA, says David. Okay, well, maybe a different connection. Damn Aussie Broadband. So anyway, guys, Owen, has your dad not encouraged you to join Aussie Broadband yet? Well, Jeremy, I know that's an inside joke because I actually encouraged him to join Aussie Broadband and he loved it. So maybe he's going to try and refer me back into it. Anyway, in at number 2, it's taken me too long to get through this. In at number 2, we've got Vanguard VAS. And in at number 1, many of you have guessed it, which is Lake Resources. Lake Resources, I've got to say, so we can see the share price shooting up in the last little while. Lake Resources blew everything else out of the water. So I don't think I've actually seen this amount of buying behavior in the data since we've been running the series. But Lake Resources was huge in terms of the buying activity of the past week. We can still see that there are a lot of people selling as well as buying. But if we just go into the news and announcements, as you know, I don't follow this company that closely simply because I think it's too early stage for me. But it's been a huge company in terms of the trade activity. So if anyone wants to know what's going on, Jake said, I traded the hell out of LKE this week. Well, Jake, maybe you're the one that's racking up all of the bills from SelfWealth. I don't know. I don't have access to that data, but maybe it's you. It's been a heck of a week. Jake, maybe you can tell us why you were trading it. That would be great. So Pocket Full of Show, you guessed, I'd ask if I could change my answer, but saw Eve already guessed bought and sold LKE. Why Lake Resources? I would love to know why Lake Resources was number 1 because there's no news that's out this week. So I'm praying to Jake, if you know anything, please fill us in. Okay, so I can see that Eve has said that she may have got 1 so far, which is great. Benny, you've guessed, must be the Apple Mac causing all the issues. Well, hey, maybe it is. Maybe this is the one time, but come on, mate. Like, there's no issues with Apple. We know this. Over 1.8 billion installed devices. Okay, so here we go. I'm going to be quick with these ones because, I've taken forever. So in at number 5, most sold, we've got Pilbara Minerals. Again, on the lithium theme, really popular over the last little while, more mature than the other businesses that operate in this sector. We've talked about it quite a bit. We haven't actually dived deep into it, but it is included in the ACDC ETF if you are interested in a more diversified exposure. So you can look at that one. In at number 4, Sayona Mining, another company that makes the list quite regularly just because it's so often traded in that thematic. If we look at the share price over time here, we can see really bouncing around just like all of the in at number 3, a company that regularly in our most sold list, which is Zip. A lot of investors really haven't liked the look or the outlook, I should say, for the buy now, pay later sector. It was interesting because many of you will know that Square, or as it's now called, Block, they recently bought Afterpay. And it was disclosed in their financials that Afterpay also had gone backwards since they acquired it in terms of its loss, meaning that it made a big loss. Luckily, the results are hidden inside of Square now, which is a much bigger business. But for investors in buy now, pay later, it's been a bit of a rough ride. Even if we look at one of the rivals, which is a firm, it's been a bit of a rough ride. So there you go. In at number 2 on the most sold list inside SelfWealth is Core Lithium. Core Lithium, speculative lithium play. Lots of investor interest lately. You will remember that Core Lithium made the list of the 10 best performing shares in the ASX over the past 10 years. Why? It's not because it's been around for a long time. It's actually just because of this spike in the share price recently. So Core Lithium seems to be gaining LKE's loss. And finally, in at number 1 is LKE. So whoever gets LKE and LKE, you will get some free trades through SelfWealth, and you'll also get a pass to the Value Investor Program, which I created. You're more than welcome. Fleur, you've said NBN emailed me saying that they were working on my system today to expect outages. Well, if I knew all these things like about my area, I wouldn't be here. But it's just I think it's bad weather in my area tonight. So, Jake, you've said LKE is supposedly related to lithium price and China demand now that they're ramping up their EV production. Fascinating. Jason, Mike was first in though, so he had 4 guesses. Eve, you did guess both. You've guessed LKE and LKE for the most bought and most sold. Congrats to you. Now, when I get these charts, I've got to be honest with you. When I get these charts, I often see the buys and the sells for each of the ETFs or each of the shares right beside each other. And there were so many buys for LKE, but the only thing that came close to it in terms of trading activity inside of SelfWealth was the selling. So a lot of investors were selling LKE as well. And remember that's only inside SelfWealth, and it's for last week. So from last Monday to last Friday, we get that data. And it's clear that there's a lot of trading activity going on. So Jake, thanks for sharing that with us. You said here, that it's supposedly due to China. So Jake, you said, I was going to guess LKE both, but then you threw me with ETFs and it threw me off. Jake, well, I'm sorry to do this, everyone. Sometimes I'm your best friend and sometimes I'm your worst enemy. In this case, I am your worst enemy because I threw ETFs in just to keep it interesting, to see if anyone would guess. And now I'm going to reveal that it was very naughty of me to do that, but it's the truth. So congratulations, Eve, says Shell. Absolutely. So now you said, interesting how lithium stocks are charging up one week and crashing down the next. Is it because it is a speculative industry and the investors do not have full confidence? Or is it because it is early stages and things will mature in the future? And I like, Nav, how you've inserted a bit of a pun there, charging up 1 week. Lithium, yes, very early for the industry, but also very early for many of these companies. They have large resources, but not much revenue. So that's what happens. Okay. So I can see, Jeremy, you've asked a great question. Owen, I know this is not your technical area, but what about a high level assessment / analysis on LKE in a future episode, just because it would be doing all of us for the first time? I can't see behind that thing there. But yes, I think that's a great idea, Jeremy. Why don't we add that to the list of things? I'll pop that on my list and I can run through it in the next couple of weeks. We can do a 15-minute special on LKE. It seems so popular. It's such a great idea. So, why don't we get into the companies that we wanted to talk about tonight, which is the 5 companies which I probably, thought that most of us would be interested in. The first is BHP. Then we'll get to CSL, talk about Redbubble for a bit, Seek and car sales. So if you own any of these, companies, please drop them in the chat. Or if you've bought some of them recently or sold some of them recently, I won't ask you to explain why or why not, but if you own any of them, that would be fantastic. I can see the Stuart's joining us in the chat again, all the way from WA. Stuart, and you've said lithium ain't lithium, Sol. So I would love to know what you, Stuart, if I could ask you, if I could single you out for a moment, and I think you'll be okay with this. Do you think that the lithium industry, as a mining industry, it has developed, or if it still has a ways to go? I'd love to know what you think. Jake, you said own lots of BHP. Funny that Oz Minerals shot them down. Yeah, it is indeed. It is indeed. At Vine Mail, I can see you've made a lot of money from LKE and still hold a lot of shares. Well, that is fantastic. Good for you. Ray, you bought BHP at 27 last March. And what is it now? $41. So congratulations, Roger. You bought BHP. Tim, you've got BHP and CSL. So CSL, if someone wants to say, I know that CSL will be a favorite. Of these 5 companies that we're about to go through, so we've got BHP, we've got Car Sales, we've got Seek. If you are brave enough or just bold enough to tell us live on the show, what was the very first one you bought? Like, how long ago was that? I think we had some investors on the show recently who said that they first bought shares in some companies 30 or 40 years ago, which is so fantastic. I love hearing stories like that. Cindy, you said, I bought BHP and CSL. I think BHP's dividend stock with CSL is a growth stock. We'll talk about that tonight. So just, Raya, I know you're not going to mind me saying this, but if you bought at $27, let's jump into BHP's results. So BHP reported a bigger dividend, which is fantastic. And I think I've got my charts already preloaded. If I can find where I put them through all these tabs. If not, I'll just get them up now. BHP reported a bigger dividend, and let's get up the results here. Results presentation, this will do. Reported a massive dividend. We already knew the results of its mining because they released their quarterly activities report. So that told us how much iron ore, how much copper, et cetera, was mined. And that was a few weeks ago. So we already had that. But now we know how the business performed in terms of financial performance. And the big thing that jumped out at everyone was this huge dividend yield. So at 325 US cents per share, Ray, and I'm taking your cost base into account of $27. So if I bring that up, if I go $3.27 USD to AUD, that's $4.66. Now I'm going to do some quick math again, and I'm going to divide that by 27. Your dividend yield on your cost base is 17%. So I'm buttering your bread here, Ray. That is an incredible dividend yield, meaning that of your original purchase, whatever you bought in that company, you're getting a 17% dividend over a full year. And what makes this even better right here is it's fully franked. If you're an Australian tax resident and you can collect the franking credits, the quick math is you can divide it by 0.7. And so the actual after-tax dividend yield for some investors would be closer to 25%. So this is a pretty massive result for a lot of people that like fully franked dividend yields. And, the thing is, I guess if you've owned BHP for long enough, you've probably paid back your investment in dividends alone, which is fantastic. I think we talked 2 or 3 weeks ago about Rio Tinto and its ability to pay massive dividends. And we can see with BHP, it's done the same. So as always, remember the big kind of asterisk that we put on this is that when we are investing, we look through the windshield, not the rear view mirror. And that means when we invest in a company today, we get the dividends of last year, we get the dividends of the year ahead. And so what we tend to do is we look to, forecasts and what analysts are forecasting for the year ahead. And we can see that the dividends are expected to decline in the year ahead. And that could be through softness in commodity prices or weaknesses. So, so that's sorry if I did end up calling you out there, Ray, but that's a fantastic, the reason why I called you out is that's a fantastic result, I think. I think if anyone can get over 10% dividend yield and it comes with franking credits, well, fantastic. Stuart, you've answered my question about lithium and you said yes, but it comes down to the lithium mineral and how to get it out of the ore, right? So I'm guessing you're, Stuart, you're saying there, like basically the quality of the ore in the mines. If you do know something about this, Stuart, about this industry, I would love to know which mining companies tend to have good deposits, in your opinion. If you do have an opinion on it, you may not, which is great. I can see a question's come through from Vine Mail for Rob in the chat there. If you do have any support questions, by the way, guys, be sure to send them through to the support team by heading to selfwealth.com.au, and there's a widget down the bottom corner. Matthew, you've come through and said you've bought BHP at $12.50 a share. When was that, Matthew? So $12.50 per share must have been quite a while ago. I think that would have been even before 2016. So, I mean, your dividend yield is, huge, enormous. If Ray's was big, Tree by 3P said, you bought BHP in 2005 at $17 and another lot in 2013 at $32. Feeling very good. Well, you would be. So, Digby Frog, you've said suggestion for my review, MME. I can add that to the list. I'll add it to my list over here, MME. I'll take a look at that in the next couple of weeks if that's okay. Otherwise, if we get time tonight, I'll have a quick look. Colin, you've said, I bought CSL 3 years ago and before the COVID crash, when the market was hugely overpriced as a bit of a hedge, only 5% of the portfolio. It's done about 5% from then to today. It's fantastic. I'm just loving all of this stuff. I just really, really love all this stuff. MD Kabir, you've asked, how do I value BHP? Well, there are multiple ways, and I'll quickly get to this because I'm really delaying tonight. But there are multiple ways to, I guess, value any company. But the first way that you could value a company like BHP is basically what you do is you get in your model and you forecast dividends or you forecast revenue for the year ahead. I'll see if I've got this. So just quickly, I'm going to just quickly jump into what we've got for our course. This is for the Value Investor Program, and I'll quickly show you a company that I did last week, which is this company. This company is ARB, the Bull Bars company, which you probably know. So every valuation model that analysts tend to do, MD Kabir, starts at the top, and you find out, well, how do I get to revenue? So how do I forecast a company's revenue? This is a 4x4 company. It does like parts and equipment. But if you were forecasting BHP, what you'd start with up the top is the iron ore segment, and you'd make a forecast for iron ore. You'd make a forecast for copper. You'd make a forecast for any of the divisions, really. And then you'd get down to total revenue. And from there, you just go through the usual steps to take away all the costs. And you'll remember that you get down to this thing called free cash flow. And from there, we just take that cash flow and we bring it to today's dollars. I won't go through it in depth because that's like a whole 3 months in itself, but you get the idea. We basically do exactly the same thing as we do here. But the complexity with modeling a company, BHP, is that you have to forecast commodity prices if you do it that way, which can be quite tricky. So another way that you can value it is you can just take the future value of dividends. Now, the oldest stock market valuation tool is actually to take, where is it? Here we go. Now we'll go forecast actually. So the oldest stock market valuation tool is actually to take the dividends in the future and give it a valuation for today. So it would be saying, what are the forecast dividends for the year ahead? And what's the value of those to us today? And that's the simplest way, and it's called a dividend discount model, and you could use that too. So MD, yeah, you could use a DCF, but like I said, it would be quite complicated. So you might even use some earnings or something. Andrew Page, who I know that was on the show recently, spoke about valuation. Anyway, so back to BHP, back to our friend at BHP. All in all, a very, very strong result. And I think Jacob was that brought up that Oz Minerals rejected BHP's offer, and this is not unusual. So that's a double negative there. I should be a lawyer. Basically, what happens is many of the smaller mining companies end up getting bought out by larger companies, and that's simply because the bigger companies can withstand sell-offs in commodity prices, and the smaller, typically single commodity producing companies don't have the ability to withstand huge periods or extended periods of lower prices. BHP said in its remarks this week that it expects a strong and stable market going forward. It said that China will probably underpin a lot of the company's demand for its products because a lot of its iron ore, copper, and so on ends up in China. The company is investing a huge amount in its potash business, the Jansen Potash Project. And I was on the website earlier on today looking at this project. And it's based in Canada, so potash is used in fertilizer. And it's a humongous project. And just for the stage one of the project, BHP will need to spend $5.7 billion. And it's a huge project. And it's another way that BHP is going to further diversify its business. So it's really, really interesting. I can see. Okay, so Raya, you've asked a really good question. Sorry to ask, when you compute the intrinsic value of a company, do you use a 30% margin of safety as well? So Raya, that's a great question. So basically what you're asking, and I'll quickly bring it back to me, is when we do a valuation of a company, a valuation is simply us estimating what we think a company is worth. So if we say a company is worth $100 a share, then we say to ourselves, well, how much below that are we willing to pay? Because you're not going to pay $110 for a company that you think is worth 100, because that would be overvalued. But would you pay $90 for a $100 valuation? And the answer is, it depends, right? So it really depends on basically what kind of risk you perceive in the business. For a business like BHP, even though it is a large and established company, you're probably not going to get a 30% discount to your intrinsic valuation. It's hard to know when you do your valuations if you're wrong or if the market's wrong. And by that I mean, if you say, oh, I think it's worth 30% more than $41, you might actually have something wrong in your model, because a company like BHP doesn't always get that cheap. So what I normally like to do, Ray, is I normally like to do multiple different types of valuation models on a company to make sure that I'm actually, common sense checking some of my stuff. So I don't necessarily apply those rules. If it's a small company that seems very undervalued, yes, I like to have that sort of stuff. Nav, you said, I bought Appen at $13 only to sell in the low $4. That should make you more jealous. Yeah, well, we've all had those. So all in awe. Nice pun, Jason. Very well done. Very well played. Stevie, you've missed the first 40 minutes of the live stream. Don't worry, we had internet problems. So it's all good. Ultimately, BHP's result was very solid. We talked a few weeks ago about the different types of things that we should be looking at in a company's financial results this year. And I can tell you that across basically all of the metrics, BHP scored really well. You may remember that, or you will know if you own BHP shares, that the company recently sold its oil and gas business to Woodside Group, and I have received some questions on this through the Rask site. So apologies if I haven't got to them yet. And Verghese, I can see you've just brought this up. So you said, how is the offloading of the oil to Woodside Group going to affect BHP? That's a great question. So if we go into the financials, if you are in the chat, please jump into the poll. I can see that Rob's just done a poll. So if you are in there, please say g'day and fill out the poll if you would. I don't know what it is. I can't see it in front of me right now. I can just see his mention. So the question is, how has it affected BHP's business? I thought we'd have the results up there, but we don't actually have them in the SelfWealth website. So I'm going to hopefully jump down and go here, and I think this is the one that we want. Yes, this is the one. So we'll wait for this to download. Thank you, Telstra, for downloading it nice and quick. Please, please, please. So here we go. We've got the results. And Verghese, this is the answer to your question. This is what you have been seeking. I will answer your question. If we go down to the company's, income statement and to its financial statements, if we go back up, apologies for the small font. I'll zoom in just a second. This is a huge annual report. And I'll see if there's a quicker way for me to get to it. Comprehensive. Let's have a look. Here we go. If we zoom in, we can actually see that BHP's done the hard yards for us. They've actually excluded things. That's why they quote continuing operations. So in terms of how it will affect the business, we basically have to take management's word for what is continuing and what is not continuing. And we can see that here. And then down the very bottom here is where we have the discontinued operations. We can see that they've done that there. So management have already excluded the parts of the annual report that were affected by the sale of the oil and gas business. And we can see it here. It says restated in the years gone past. So I hope that makes sense. I hope it answers your question. It definitely answered some of mine. But basically, the net result is that BHP will be a simpler business once it's done. And I think the oil and gas business will get a better will get better management under Woodside because it will be more focused than it is inside this behemoth known as BHP. So the simplification definitely helps. Okay, so I will now jump to the next one. I think for the most part, BHP's result was very good. Spoke about with Rio Tinto recently. It all comes back to what do commodity prices do over the next 12 to 24 months. Currently, analysts are forecasting some weaker. I'll go to the right company, BHP. Some weaker dividends in the years ahead, keeping in mind the whole separation of Woodside Energy. You can see here they're forecasting lower dividends per share. But even if, let's say that hypothetically the analysts are right, even at $2.36 per share fully franked, it's still a pretty compelling dividend yield. Michael, I can see that you say here you bought CSL on the float. Wow, that's fantastic. I really like that. So let's go to CSL, seeing that it's next on my list. CSL Limited reported results, and I'm sorry, I can't remember who mentioned it, but maybe it was you, Eve, or someone else that said they bought CSL for growth. Now, I hate to be the bearer of bad news, but CSL's business actually hasn't been growing as fast as many people suspect. The business has been an absolutely outstanding one over the last 20 to 30 years. If we bring up the full share price chart, let's jump back to Google here, and we can see since 1999, it's gone from $4.67 all the way up to $286. So, fantastic long-term performer. But if we go to the financial section and we go into, and I'll bring up just total revenue, and then I'll bring up operating income, which is another version of profit. Now we can see that over time it's been steady as she goes. CSL has been reporting, more and more sales revenue. It's been growing in that respect. But if we actually look, the business over time has, and I'll get rid of that operating income line there. In more recent years, the business entered a different period of growth. That's what I'd probably call it, or how I'd phrase it. And if we just look at the total debt of the business over time, the total debt of the business has been going up and recently hit $5.9 billion. And we still haven't got I'll get to the latest results in just a moment. But the business has been taking on more and more debt. And you might be asking, well, why is a business that is growing so fast, that's in the healthcare industry, why is it continuing to go up and up and up in debt? Is that a good thing or a bad thing? And I think this is actually, it's actually been a smart thing by CSL, but it actually tells you something about a business. So typically in the lifespan of a company, what typically happens is that as it gets older, it has a better ability to take on debt because its business is quote unquote mature. And what that means is that the total, I guess, the growth of the business may not necessarily be as strong as it once was. This is like the reverse of what happens with an individual in Australia. In Australia, if you're a young person and you've just got into your job, you typically go and get a massive mortgage and then you start paying it down. Well, in the share market, it's typically the other way around. You typically take on debt towards your latter years, so to speak. And that's typically the way it works. And the reason that it happens is that as a company grows, it can access debt markets for cheaper, and it can also use that debt to buy and make acquisitions. We have seen from CSL in recent years. It has taken on debt, it's made acquisitions, but it's still made a profit and it's still paying back shareholders in the form of dividends. So for the most part, really strong growth, really strong in terms of dividend. Same dividend as last year at $2.22 per share. Converted into Aussie dollars. It's got a little bit of franking on it, not fully franked, but a little bit of franking. So it's a pretty compelling dividend. So if you convert it to Australian dollars, it's up 6%, says CSL. So basically they're saying, hey, we didn't increase dividend, but with in Australian dollars, if you're an Australian shareholder, it's gone up a little bit thanks to the currency. We can see earnings per share or profits per share down 8%. We can see net profit of $5 billion. It was actually down 6% if you held the currency flat, with revenue up 3% at constant currency. Now, in recent years, like I said, CSL has made a few acquisitions. The big thing that has held CSL back to give it some grace here. The big thing that's held CSL back has been basically blood plasma has been very hard to get a hold of. Obviously, around the world, COVID has impacted CSL's main business, which is collecting blood plasma through its network. And it has made acquisitions, as I said, in recent times, and some of those have started to pay off. And if blood plasma collections continue to grow, as they have said in recent, they have said it has happened recently, and it can continue to make more money from these acquisitions, then we should see CSL return to growth. But I would just caution everyone that it's maybe not going to achieve the same amount of growth going forward as it has historically. So if we look at historical growth, if we go back to ratios, remember we can find that in here. And if we go growth rates, we can see over the last 5 years, it's grown revenue at 11% per year. Now, as a bigger company, it's harder to grow at faster rates, right? Because as you get bigger, the laws of gravity begin to kick in. Growing 11% on $2 billion of profit is very different to growing 11% on $100 million. So still a phenomenal business, growing reasonably well for a large company, but it's probably not in what I would call the growth stock camp now. So just keep that in mind. MD Kabir, how does CSL make money? It makes money in multiple ways. So some of the ways include blood plasma collections. It owns, I think I'm going to pronounce this correctly, Seqirus business, where it creates influenza vaccines. It's I believe Australia's largest snake bite anti-venom producer. So many different business models within this global, what they call a global biopharmaceutical company. When COVID hit, they actually created I believe they helped to reproduce some of the COVID vaccines through their sites throughout Australia for AstraZeneca. But when COVID first hit, I feel like the CSL website got hit with just about everyone in Australia saying, can CSL help us? And they put out an announcement saying, this is not our core speciality, but we can help maybe in other ways. So Raptor, you've said high PE for a low growth stock. And that's probably the way that I would characterize. PE ratio is quite high at 42 times. That's a high price to earnings ratio. But if it can continue to grow, maybe it can justify a higher PE ratio. Like, would pay a premium to invest in CSL over other companies because it's high quality. But that said, it's one of those businesses that it does have a limit on pricing. What I mean to say is, Raptor, it's probably never going to be quote unquote cheap like some of the other companies, because it's so high quality. Investors know it's a really high quality one. I can see a good question come through, and where was it? I can't actually see where it's gone to. There was actually a great question that came through, and I cannot see where I've lost it. What was the question? Raptor, you actually asked the question that I answered without knowing. So I think great minds think alike there. So that's great. There was a question come through about Coles and whether we should cover Coles and Endeavour Group. I covered Woolworths recently on the Australian Finance podcast with my co-host Kate. So if you are interested in the supermarket, we did a bit of a supermarket wars. We compared Woolworths to Coles in just about every way. And what we found was that it's incredible how many shoppers prefer Woolworths over. I feel like that's a whole SelfWealth live session in itself. So maybe in the future we can do a supermarket wars. So great talking point there. Stevie, you just said another idea for next week: a Fortescue Metals deep dive into green hydrogen / green steel. I'm putting that on my list. Fortescue Metals, green hydrogen. While you're thinking of that, Stevie, and I'll get to the next company now, which is Redbubble. But while you're thinking about that, I would highly encourage you, if you haven't already, go and check out the Boyer speeches, the Boyer presentations by Fortescue Metals found Twiggy Forrest. So Twiggy Forrest, Boyer. So if you go and check out this Boyer lecture, it is incredible, from Twiggy Forrest. So he's the founder of Fortescue Metals, and he now has a PhD. He went and did a PhD, even though being one of Australia's richest or wealthiest people. Fun fact, I believe his investment, so his personal investment fund, a couple of years ago, received a dividend worth $2.4 billion. just his dividend. So yeah, incredible. But if that's a whole thing in itself, it's a fantastic topic. I actually again did a deep dive for that on the Australian Finance. I'm going to Google that. Doctor of Fish, says Martin. Indeed. Okay, Redbubble. What does it do? Who is it? Was it a good result? So for full disclosure, I recommended Redbubble and I regret it. I recommended it to our members and I regret the recommendation ever taking place because I recommended it at quite a high price and I recommended it at a time when I thought its growth could continue and it just didn't. So what does Redbubble do? And I'll see if I've got my other chart here. So here we go. Redbubble is a global marketplace for creators. So it's a place where you can go and you can buy t-shirts or you can buy, I don't know, I guess basically anything you can buy on there and you can get it customized. So why don't we just quickly have a look. Redbubble.com is the URL. So here we can see you can buy t-shirts, you can buy scarves for your dog by the looks of it. That's interesting. And you can buy a bunch of other different things from the website and it gets delivered to you. By the way, guys, if you see this honey thing on the right-hand side, if you haven't already downloaded this for your Chrome web browser, I would highly encourage you to do it. Whichever website you go to, it automatically scans the internet for coupon codes and it will add that coupon code if you buy anything. And it's owned by PayPal, which is a great company. So, yeah. So there's a Plant One shop on Redbubble. Plant One, is there really? Let's have a quick look. Okay, Plant One. Oh, there is two. Plant One. If that's you, the one and only on Plant One. So you can sell, if you are an artist, you can sell some of your designs on Redbubble and then people can go and make them into caps. You can make them into backpacks. You can make them into whatever you want. Many years ago, I believe I tried to make one of these. Let's have a quick look and see if it's on there. No, it doesn't look like it's appearing. We've just got the Canadian hockey player instead. Turns out I'm not very good at this thing called selling art. Anyway, so Redbubble allows you to put things on a t-shirt. And for artists, it's great because for an artist, if you have a design that you have made for someone for their business cards, or maybe you have a design that could be used by anyone, you can get it made into posters, into water bottles, into phone covers, whatever. It was a big thing when COVID hit because you could get anything put a mask and you can buy it through Redbubble. That's the way it works. Rob says, damn, I want Plant One merch. Yes, indeed. And Benny says, honey is great. Yeah, honey is great. So if you are into shopping online, it's a fantastic tool, save you money. Okay, so obviously the success of Redbubble is dependent on how many customers it gets in, visiting its website or its app, how much people spend, so on and so forth. And we can see here on this chart that Redbubble has, around about 27, 28 million visits a month. But it also has an app, which wouldn't be captured here. So we can see this is comparing it to Society6, which is a different website. And you can see the time on site is better for Redbubble. You can see that it's got a lot more visitors. However, if we compare Redbubble to Etsy, Etsy being the big US competitor, we can see just how much smaller Redbubble is. So here we can see that Etsy receives around 400 million website hits a month versus Redbubble's 28 million. So, Jeremy, you just read my mind. You said, is Etsy its competitor? Etsy is probably one of the competitors that competes for the same wallet, if you like. Like if you have a bunch of consumers and a bunch of artists, they're probably competing. And Etsy, for the most part, you would say is high quality. It typically focuses on a slightly different demographic, Etsy.com. You might go to Redbubble. If I could be so crude, you might go to Redbubble for something that's a bit silly and something that's a bit more out there in terms of its creative. Whereas you might go to Etsy for that you actually want around your house or something that is a nice piece of like jewelry for a friend if you're shopping, something like that. I mean, that $2,900 for that bracelet looks a bit expensive. Very expensive. Maybe it comes with the hand for that price. I don't know. So in any case, that's the difference between these two sites. There are many competitors to Redbubble and to Etsy. One of the big competitors was actually launched by Amazon. It was actually called Amazon Homemade. Homemade is Amazon's version of them. So you could, as an artist, go and put your stuff on Amazon and it could be sold. It hasn't been as effective and at competing against Etsy and the like, but it is still one of those competitors. They all kind of compete. So now that we know what the business does, let's zoom back into the results. And I think the investor presentation will be the best version of this. If we go here and we just look at the Prezzo, once this loads for us, it's probably a big document. But while that loads, we can just have a look here that in terms of revenue that comes through the marketplace, we can see $486 million. It was actually down 13% over the past year. So during COVID, Redbubble was a massive beneficiary because think about it. If you couldn't buy your favorite things in person during COVID, you could, if you could go online through Redbubble and you could buy it there. And so here we can see total revenue was up $573 million, still down from 657. And hopefully my report has got up now. Let's have a look. Here we go. We've got it. Now, if we come in, the thing to keep in mind is that Redbubble has to pay its artists, right? So if you're an artist on the platform, and the best chart is, where am I? It's coming up. The best chart is this one right here, because this one shows basically how it works. Redbubble gets money in on the left-hand side. So a customer buys something. On the right-hand side, you can see that they're paying the artist after 4 weeks after the sale. There's a bit of tax to pay, which leaves $100 in marketplace revenue. Typically, a t-shirt, if someone orders a t-shirt plus delivery, you get $61. That's paid out after 4 weeks, which leaves $39 million of gross profit. They spend about $14 in paid marketing. So that gives them what they call GPAPA. And you can see here, it's $25. So on average, they're suggesting that they make $25 per $130 that gets actually bought and sold on the website. And the key to Redbubble is basically scale. During COVID, it was a huge beneficiary because it was getting all of these users for free. It didn't have to pay as much to get the users. And so we can see here how the income statement actually shakes out. And I won't bore you with the details, but suffice it to say that Redbubble's result was a lot weaker than people were expecting. The top line revenue down 13%. Management did say it's going to be a little bit weaker than last year. They have said that the whole time, so credit to them. You can see that they've paid more to acquire new users, and ultimately you can see that they're still reporting a loss. So in terms of operating profit, $22 million negative. And the key to Redbubble at the end of the day is, can it continue to attract users? And clearly the market thinks right now that it's kind of reached its peak. And so shares were down 31% today, but that was already off a big fall in share price over the past little while. So we can see a peak to $7 a share, fallen now down to $1.10. So if you've said anytime a company is making up new financial metrics for their reports, I am suspicious. So there's some good comments in here by the team here. I can see Jeremy, you said, to Shell's point, makes me wonder if the management team is reliable, but it's a damn good call to ask these questions. Indeed. So Matthew, you've said Vistaprint is potentially one of those companies that could compete. Pocketful of Shell, you said, here's from Nav. You said Redbubble. That's what Motley Fool one of Motley Fool's recommendations, and taken on face value. I have been in that boat. It's one of those things that's just been sold off again and again and again. Plant one, before we move on, I'd love to know, have you sold anything through Redbubble? And if so, have you found the experience to be good? I would love to know the answer to that, because obviously I created kind of like a little dummy account on Redbubble, but it wasn't anything serious. Eve, you said, I want to see strong traditional metrics on the 3 key financial statements. Absolutely, you do. And if we looked at the financial statements for Redbubble, and if we go right down, right down to the fun stuff, down to the financial statements, you can see that the revenue is falling. We can see the total operating expenses. This was the second line, you will remember, on the things that we look for. We're looking at the, here it is. Third thing, sorry, we're looking at the increase in expenses during this period. And we can see that the company still spending a lot of money It's spending a lot of money on fulfillment. So that's for the manufacturing of products. We can see that employee costs have also gone up a bit, and we can see marketing expenses also up a little bit. And the reality is that Redbubble still needs to spend money to make money, so to speak. They're saying that a lot of its users are coming through the app and repeat purchases, but it's one of those things at the moment. Plant One, you've said yes. Yep, and you own the company, so you sell things through it. That's fantastic. Overseas buyers for products. That's fantastic. Really, really good. So MD, you've said, why do customers want to buy from Redbubble rather than from its competitors? MD, that the idea is that it's kind of like a network effect. Is that once you put your artwork on Redbubble, Redbubble takes care of everything for you. So unlike, say, I don't know, say like a Shopify website, right? If you build a Shopify website, or if you have an Instagram page and you start selling your artwork, you typically have to paint the artwork, to print the artwork, to ship the artwork to the customer. Whereas through Redbubble, they do all of that for you. All you've got to do is upload your design. And then when a user comes along like me and goes, oh, that's really nice, and buys one of those things, as the artist, you actually don't have to do anything. So you can just put your stuff on there and away you go. So if we just quickly jump down to the cash flow statement, to Eve's point, one of the things that I look for is basically the cash flow activities. You know this, minus the cash used in investing activities. So this one minus this one gives us a read on the free cash flow. We'd also want to subtract that there. And we can see the company is actually going backwards. And we can see during the financial year, it went backwards around about $11.7 million, rather than a year before when it went up $48 million. So that's something to consider. Plant One, I would love to know over the next few months if you keep getting sales through your Plant One, or if it continues, because a lot of Redbubble shareholders and faithfuls are hanging on, saying, I think this is going to be, I still think it's good. I still think it's good. So for me, it was a really tough result from Redbubble. I'm not surprised the share market has sold it down. That said, I think the management team at Redbubble are fantastic. It's just a really hard business themselves in. Okay, so I'll be quick. I'll cover the next two companies in 10 minutes. The first company, which I think was a really outstanding result, was carsales.com. Carsales.com is the owner of carsales.com.au, which many of you know. What many of you may not know is that Car Sales makes a huge amount of money through its dealers, not just selling, the cars that you and I would sell, but actually through its dealers. So if we just jump into the results prezzo, I was actually listening to the analyst call today. We can see look-through revenue up 36% to $609 million. Net profit after tax, $195 million, or on an adjusted basis, up 23% to $161. And we can see some of the key numbers here. In Australia, and I guess the Australia-New Zealand market, there's no doubt that Car Sales is the leader. I was very concerned when Facebook Marketplace first launched in Australia, and I was very concerned when Gumtree started pushing into Australia. And the reality is, both of those businesses, while they are impressive, you can go on Facebook Marketplace and sell, your power adapter or your keyboard that you're not using anymore. You can sell it in probably minutes. So it's fantastic. Facebook and Gumtree are fantastic for different types of things. But when it comes to selling cars, carsales.com is the website that most people use. More and more, the business is shifting to international markets. Most recently, if you own Car Sales shares, you will know that they bought Trader Interactive, which does RVs or motorhomes in the United States. And I think there's a huge opportunity there. All up, they paid close to $1.8 billion, I think, for that business. But it's a huge step for Car Sales to shift into the United States market. And Car Sales does have assets in Brazil, Mexico, Korea, and all throughout Asia. And it's a fantastic business model. It is a fantastic business model. It's basically grown out of this business that can just sell cars, basically, and give sellers like you and I, and buyers also like you and I, confidence that what you're getting is actually I guess you're actually getting what it says. So here we go. We've got the Car Sales website. If we scroll right down to the bottom, we can see that car sales is offering this new thing called instant offer. And you'll see here, it's a hassle-free way to sell your car in 24 hours. Your car must be under 12 years of age and have less than 183,000 kilometers. If anyone has done this, I would love to know what you made of it. But basically, car sales is willing to buy your car. And this is actually something that has happened in the United States, where these big digital platforms like car sales in the US might be like not Twilio, Zillow. Here in Australia might be realestate.com.au. Many of these big companies actually then start to say, hey, well, all these people are buying and selling cars and we're only charging $50 for an ad. Why don't we buy the car and then sell it to the next person and make a profit? And so car sales is basically moving further and further into the value chain, meaning they're trying to capture more of the pie. A lot of those things, by the way, don't work. In some places in the world they might, but in some places they don't. So that move by these big platforms doesn't always work. But car sales has done a fantastic job of growing its business. If I can bring up the most recent annual report, where are we? Not this one. Let's just go to normal announcements. Any news type, and we'll bring this up. Jake, you've said, I used Instant Offer. They offered more than the rip-off dealership offered, but I still sold privately for more dollars. Yeah, that's interesting. That's interesting, Jake. Thank you for sharing that. So it's actually what they said on the call too. So most people that go to car sales, they're actually finding that people that are using car sales just in the normal way to sell their car. Did you end up selling it through private sale on car sales, Jake, or did you sell it some other way? I would love to know why, how you did it. A lot of people that go through car sales and they go to the dealers and they go to the instant offer, they actually end up selling their car anyway themselves, but just by like doing their own sale, because what we're finding in Australia is that used cars are actually going up in price. Now, one of the things that people are really fearful of when it comes to the car sales share price is they're actually worried that in the next year or so, as as the economy, as interest rates go up, as people can't spend as much money, people are going to cut back on costs, fuel prices are really high, so on and so forth. Some investors are really worried companies like car sales might struggle. But I got to tell you what, I was really impressed with the management team today. Or I listened to it today. It was a couple of days ago now. But the reality is some companies like, say, car sales are actually in a really interesting position in that they can actually do better as the economy falters, or at least they can withstand some of the short-term pain. And what I mean by that is, for example, in a recession, some people will put off buying a brand new car because they simply can't afford it. So what do? They go and buy a second-hand car, which is good for car sales. Or maybe they sell their second car because they don't need two cars anymore because only one person is working. Well, that's also good for car sales. Of course, it's not always that perfect, but yeah, I think you get the idea. So here we go, Jake, to continue with your story. I valued the car at $22,000 to $24,000. The dealer offered $16,000. The instant offer offered $18,000, and you ended up selling it via Gumtree in the end. Sparky, you said Facebook Marketplace is the best for secondhand. Secondhand car sales are insane. They are insane right now. Rob, do you reckon the first SelfWealth / live session to hit 2 hours will occur this year? Is it Owen awesome at this? Yeah, sorry. I am sorry if I'm going over time, Jeremy. I'm going to be very quick and wrapped up in just a moment. But that is a fascinating story there, Jake. So you ended up selling it for $22,500, if anyone was interested. That is 2021 Suzuki Swift. Money on wheels. That's crazy, Jake. Well done. So you sold it for $22,500. And through car sales instant offer, they offered you $18,000. The dealer offered you $16,000. So that's good on you for backing yourself and taking it on. But that's basically what happens. So car sales, when they do this instant offer thing, obviously have to offer you less than you could get it. You could sell it for with your own hands, because they have to make a profit too. So their algorithms have to price in that, right? But you'd think, car sales has the best data. So yeah, you'd think that they'd have to, obviously do that. So yeah, okay, great, everyone. Thanks for sticking around. Okay, so Artian, you said I used instant offer. They bought the car from me for 15,750. Oh no, so they offered it. They offered you 10,300, and you bought the car for 15,700, and you sold it for 18,000 to a secondhand dealer. Whoa, wow. So yeah, the dealer, and just to jump back to Jake's comment, dealer pricing is a joke. So yeah, that's fair enough. Anyway, so car sales actually is in a very strong position in its Australian market and making that globally. So you can see like clockwork over the long term, the company's continued to grow. And if we look, even though car sales is what we would call a growth stock, quote unquote, the dividends that it's paid out over many years have continued to grow, even through COVID. So it's done a fantastic job of that. Carsales.com, in my opinion, is one of the ASX's stronger businesses. And yes, we're taking a risk betting that management can grow in the United States. But for the most part, it's actually a really interesting business. Now, that's not to say I'm not saying that it's a cheap share price or something like that today. But I think if I held the shares, I think I would be, quietly confident that a bigger, better future lay ahead of it. And we can do a deep dive on this in the future if you want. Okay, so I've got one final company to go. Does anyone own Seek? Anyone own Seek? While you answer that question, I'm going to have the chat. Colin, Colin, you said the chicken and mushroom risotto cooked while watching is divine. That's fantastic, Colin. You know what? I actually in the email that I send out to Rask subscribers to say, hey, I'm going on SelfWealth Live tonight. You can catch me over there and say g'day. I say, why not, cook your dinner, bring your glass of wine, or bring your non-alcoholic soda. I haven't drank this, but no sugar Coke. There's a free plug to Coca-Cola. Good on me. Ruining the world with bigger waistlines and all that. But anyway, so I say, bring your Coke along, bring your risotto along. Why not, hey? That's what we're all here for. A bit of fun, talking, investing, and do this. Jake, you've said, I own Seek. I used it as an employer and an employee. Very good, and no real good competitors except LinkedIn, maybe. Jeremy, Pocketful of Shell. I love Jeremy and Pocketful of Shell kind of have their own conversations going on throughout the chat. It's great. So as per my previous email, I want to say passive aggressive. Way to say I asked a question a little earlier. Which question, sorry, did you ask Shell? Can you please ask me that question again? I want to make sure I don't miss it. Stevie, you said a colleague told me to use Indeed, and that's how I found my current job. Easy to use layout and doesn't require to submit several answers first. Good point. Jake said, add some whiskey on rocks, and we're talking. Colin, you said, I bought and sold Seek, made a mozza. Yeah, well, I bought and sold Seek and didn't make much money. In fact, I think I've told this story before, but I actually bought Seek, I think it was around $6 or $7. So that was way back. It would have been way back in 2012, 2013. And I sold out because I thought this thing isn't going to grow anymore. And look where it is now. Congratulations. That's another one that I can put on the mantelpiece. So there used to be a website called Careers One, says Jeremy, but Seek totally beat them out of the water. Yeah. So that's actually a good point. So back to SimilarWeb, this website that anyone can use. If we go to Seek, when you go into SimilarWeb, this website that's free for this version of it, if you're looking for the competitors of a digital company, you put in the company that you're looking for, making sure that you use their right web domain. Then you click Add to Compare, and you can see the different competitors. So here, if we go Career One, we'll see the difference in size between Seek and Career One. And here, Jeremy, to your part, we can see how much bigger is Seek. You can barely even see the column chart for Career One. So there you go. Okay. So anyway, let's jump on with the company's results. How did it actually go? For the most part, Seek's results are actually pretty strong. So Seek's result was actually pretty good. The problem is, why is the share price down so far? It's because everyone is actually a little bit concerned about the company's outlook. So remember before how we said that, and I'll just bring this up on the company's website, Seek Investor Relations. Remember before how I said that carsales.com kind of has what we call counter-cyclical features, meaning that there are some things that even if the economy goes bad, it should actually be okay. Well, with Seek, it's kind of the opposite, right? Because when you go and you put a job ad on Seek, in a time like now, it's going to be great. There's going to be heaps of job ads on there. So Seek makes money. But when a recession hits, there aren't as many jobs to go around. Seek doesn't benefit as much. So if we go, what is it? I think we covered this a few weeks ago on the show. So Australian job vacancies. So there's actually an official number of this, which shows job vacancies. If we go, and I think it's on Trading Economics, this one right here. So this website is actually a really good indicator of what can come from Seek. And so if we look here, right, we'll go over 25 years of data. So this chart shows Australian job vacancies. And as we know at the moment, I was even chatting to the pathologist this morning when I was getting my bloods taken. And she said, yeah, sometimes and for context, there are 3 pathologies in my area. And she said, yes, a lot of the times lately, our other 2 sites have had to close for the day because we can't get staff. We just simply don't have enough staff. She said to me, I don't know what it is, but no one wants to work, it seems. So this is happening all over the place, right? So here we can see Australian job vacancies, and we can see it's gone through the roof. It's at a record high. We covered this a few weeks ago when we talked about the people predicting a recession in Australia. And so here we can see this is a pretty good indicator for Seek, right? Because, it's pretty strong, sign that there's going to be people listing jobs on websites and so on. And so we can see sales revenue from the continuing operations at Seek were up 47%. And Seek is another one of these great Australian success stories. We can see the final dividend is 21 cents, which was up from last year at 20 cents, and it adds to the interim dividend of 23 cents. So 43 cents all up. So if we go back to the share price, 43 cents on $23 is a pretty good dividend yield. So we can see if we scroll down, 1.9% dividend based on the data here inside SelfWealth. And Shell, I can see a few things that you've written in here, so thank you. So here we go. We got the only thing that makes me nervous as a Seek shareholder is that a lot of the big companies that employ bulk numbers of people is that these companies have their own career portals. Yeah, that's pretty common, Jake. And a lot of people in startups also use LinkedIn, or they use other types of kind of like indie or bespoke websites. A pocket full of shell. Reseek. The FY22 report on competitors is lacking. Small survey and inside research. What's the best way to judge market share and competitive threats? Pocket full of shell. I think I might have just helped you answer that question without actually seeing your question, which was that I would use websites like this. I would use websites like SimilarWeb. I would also look at companies out of the US that are reporting. We don't really have any direct competitors as far as I know, but I would be looking at things like this. Now, the key thing here is if you look at Indeed on the SimilarWeb website, you've got to remember that you're comparing the Australian.com.au website with the global website for Indeed. Because if you go to Indeed Australia, I don't think it has its own, so this is called a subdomain. So this doesn't actually have its own kind of quote unquote website. So it's a bit harder to track, but you get the sense here. If you can find out information on any of these companies, sometimes you've got to go to different websites or to, if they're listed in an overseas market. So you can see, like, here we go. So the Indeed and its affiliates are public, directly or indirectly owned by a publicly traded Japanese parent company called Recruit Holdings Co. Limited. So there you are. You might be able to find more if Recruit Holdings Co. Limited releases an annual report. You might be able to dig through that annual report shell and find out more information on how big Indeed is in Australia. And so you can also just Google on websites to understand how many jobs are vacant in Australia and then how many are shown on Seek. That's one way to do it. So Jeremy just said, I want to accidentally answered your question from before. So yeah, I did not mean to do that. Stevie, you've said, did you get paid $1,000 for your blood/plasma? I did not, Stevie. I do donate blood to the Red Cross every 3 months when I'm available. You can actually donate plasma every, I think, couple of weeks or few weeks. So yeah, it's a nice thing. But I didn't. Could I make money from this? I should speak to CSL. Seek's big competitor now is LinkedIn, says Colin. Well, yeah, I tend to agree with you, Colin. So I hope that answers your question. I honestly think that Seek's result was very strong, and I think it was very good. The problem is we don't know what happened. We don't know what's going to happen in the next year. As with all these companies, we don't know what's going to happen. Is it going to be as bad as some investors are thinking? Probably not, to be honest. Typically, things aren't as bad as people think. But we can see here, revenue up very strongly. We can see operating expenses also jumped pretty heavily, mainly because of employee benefits expenses. If we go to the cash flow statement, which is, as you know, what I always like to look at. So if we go down to the cash flow statement, we can see net cash from operating activities, almost $400 million, very strong. The reason why I like to use cash from operating activities, guys, is because some of these companies like Carsales and Seek, they have some weird accounting that goes on because they're either making acquisitions, they've sold parts of their company, or there's this other thing that happens in accounting, and I won't get into it because we're already half an hour over time. But typically what happens is they have what we call equity accounted associates. That means that they own another company, but they don't control it. So they don't always get the profits that come from that company. So that's why I always like to look at the cold hard cash. $400 million in the door. They've paid a lot of money going out the door. And we can see some reasons for that here. And this is kind of muddying the waters. This Seek Growth Fund is them just, creating a fund that you can invest in, and they'll invest the money for you. And they haven't yet fully deployed that. So that's another thing. All in all, I'll cut to the chase. Seek's result was very strong. The question is, what happens next? We'll see what analysts are forecasting for the year ahead. They're forecasting a pretty subdued outlook in terms of revenue and in terms of net income, but on a earnings per share basis, they are forecasting more growth. So analysts are still pretty confident in the future. Okay, so I'm at the end. So I will conclude with a quote, as we always do. My quote is this: the number of securities that should be owned to reduce portfolio risk is not great. As few as 10 to 15 holdings will usually suffice. Now, this quote is about diversification, and it's written by a guy called Seth Klarman. Now, I'll get to him in just a second. But what he's basically saying here is that once you know what you're doing, if you're a professional investor, perhaps, you don't need that many companies to have a diversified portfolio. Now, I would add one big lick of caution to the wind here, and that is this. For most investors, I think that 10 to 15 individual holdings is probably too few. You probably want more than that. Fortunately, through ETFs, we can have like 5 or 10 ETFs, however they want to be invested through a diversified portfolio. And then we can have, individual shares, and we can invest the bulk of our money in ETFs to get that diversification and then have the individual shares. But one of the big reasons that I wanted makes VGS look very over diversified. It does indeed, but I want you to remember that this here is a professional investor. And the real reason I wanted to bring up Seth is if we take his name and we look for his book, the book Margin of Safety, right? If you buy this book, I can almost guarantee that if you actually find the original copy of this book, there we go. It's worth $5,300. So that's why I brought it up. Jake, you've said 80% of my assets are across 8 ETFs, 20% in individual stocks. Jake, I like your style. Mate. Jason, you've said 5 ETFs equals 1,500 holdings or so. Overlap sucks, though. Yeah, it can happen. But this book, Margin of Safety, for $5,400. So you're probably wondering, wow, that must be really good. If Warren Buffett's letters are free, the value from this book must be fantastic. So if you can get Warren Buffett's shareholder letters for free, I wonder, this book must be pretty good. And the reality is, the reason the book is so expensive is that he didn't print many of them. So when he first wrote the book, he only printed a handful of books, or like so many, because he knew that if he understood the laws of supply and demand, and that if he didn't print that many, even if it was just a reasonably good book, that people would go and sell the book for a lot more money. And every year, as long as his brand and reputation continued to be strong, the value of his book would go up and up and up. So I haven't read the book, but someone did tell me once that you can get a free version online. So if you look hard enough. So keep that in mind. It's a good quote from Seth Klarman of the BHP Group. Talks about all of the kind of the nitty gritty stuff of value investing. So yeah, thank you. I got to say thanks and apologies to Rob that we went overtime tonight. It was very much, I tried to squeeze a lot in tonight, and I'm sorry. I went off track a few times and my internet stuffed up. So apologies for that, guys. So is there a class B of margin of safety, Jeremy? Very insider joke of you with Warren Buffett also there. Jeremy, you said, I only printed 6 copies of my PhD. I'm waiting for the value of it to go up. Well, yeah. I haven't done a PhD, so you're more than one ahead of me there, Jeremy, but I'm sure it's great. So thank you. Well worth the effort, I'm sure, to have those 2 letters in front of your name and the 3 after. So thank you, everyone, for joining us tonight. I do have on my list for next week, I do have a few different companies. So I've got LKE, MME, Fortescue. Some of those topics are probably like a whole SelfWealth live session in themselves. So I'll try to get to them. So just in summary, BHP, really good result. Dividends, incredible. Well done to everyone like Eve and whoever else bought, Raya, whoever else bought BHP back in time. Fantastic. Kudos to you. We had CSL. Growth is slowing a bit. If blood plasma collections come back, then we should be in for a better result in the year ahead, but it's still pretty expensive. Car sales, a really good result. Redbubble, not a very good result. But if Plant One and all of the artists on the platform keep using it and keep selling, well, it could be a brighter future ahead. They've got really good management, I'll say that much. And finally, Seek. Investors are really worried about what comes next for the Australian marketplace. Some great questions from Shell about the competitive environment. Very competitive at the moment. But Seek is finding other ways to grow, such as launching its own management investment fund. Oh, yeah, Jason, you said, how did you go with getting Elon Musk to join SelfWealth Live? Well, yeah, he did respond to us, and he said maybe in a couple of weeks. So if you keep listening over the next few weeks, maybe Elon Musk will come on the show and you can ask him questions like, what's going on with Tesla? Why did you just sell billions of dollars worth of Tesla shares? Or what was with that last crazy tweet that you just had? You can ask him all those questions if we get him on the show. So, MD Kabir, you've asked a question. Can you do a discussion about, in the future, business investment checklist? So, MD, we've actually done that. So we did an investment checklist episode not too long ago on SelfWealth Live. I'm sure if you Googled Owen Rask investment checklist, you'd probably find one of our PDFs as well. As Rob says, pretty sure Elon trades on SelfWealth, to be honest. Yeah, that would be right, Rob. I'm pretty sure that he's the one that's popping up LKE every week. He keeps trading in and out of the damn thing. So that's what's going on there. Thank you, everyone, who hung around. Please don't forget to subscribe to SelfWealth. It makes a huge difference when you hit that subscribe button. It's basically like Rob and I's #1 thing that we look at every week. So please hit subscribe, because we'll be back next Wednesday. And I promise I'll have a full Telstra or NBN internet connection if I can get this thing sorted by then. So thank you. Yeah. Apparently Elon Musk, very big on lithium. It's a whole thing. Apparently he likes lithium. Something to do with, renewable energy and electric cars or something. I don't know. He said something about renewable energy. So please hit subscribe. We'll see you next week, 6 p.m. Again, sorry for running over time tonight. Thank you for everyone and who joined us. And don't forget, you can find us on social media. Use the hashtag SelfWealth Live on Twitter. I've got a few messages come through this week. Sorry, I've been sick, so I haven't got back to you yet, but I will in the next couple of days. So thank you, everyone. Pocket full of shell. I will enjoy the Danny Nongs. From both Rob and I, thank you so much for joining us. If you did win tonight, if you won the giveaway, please send us an email, marketing@selfwealth.com.au. All right, I'm out of here. Have a wonderful night. Thank you so much for joining us.